Peter Switzer. Welcome to the program that helps you make the absolute most of your money. On Switzer Tonight, a close look at what moved the markets today. We'll take a closer look at jobs numbers and Telstra results, and we'll talk investment strategy with expert Roger Montgomery. I see beside me now is the great, redoubtable, incomparable Roger Montgomery. And
kind, mate. Thank you very much.
And Roger is an independent investment expert who was supposed to do the second slot, but our first slot guy has gone missing in action. So luckily we've got as I say, the very well-informed Roger Montgomery here. So I'm going to take you in for a while, and we'll talk about the market today, what we saw today.
Can I just say a quick hello to Peter, who spent some time in. He's a huge fan of your show.
Great.
And I spoke to him today. He spent a little bit of time in hospital today, but he's on the mend.
And do they have the business channel in his hospital as well?
I don't know if they do, but they wouldn't have had your show because he was in during the day.
Yeah.
But I promised him I'd say hello. So
fantastic.
Thank you very much for that opportunity.
You're a good man. All right, Roger, I know you're not a person who makes his decisions on what you see on a daily basis, but I know you look at what goes on. What about the Telstra result? What was your analysis of it?
Look, you probably know this, Peter. I've said this before. I'm not concerned about this result or even the next result. What I'm interested in is where is this business going to be in 3, 4, 5 years' time? Now, when you look at the business's track record, we've had, you know, I've said this a few times before, but we've had, in the last decade, mobile phone penetration has gone from something like 8 million services to 22 million services.
Yep.
We've had internet in the home penetration and obviously business, but in the home, penetration of the internet's gone from 30% 10 years ago to about 85 or even 90% now. And then we've had pay TV, or what Richard was telling me you like to call subscription-based television, has gone from nothing, it didn't exist 10 years ago, to 50-something% of households in Australia now.
And it was down around 30-odd% not long ago.
Well, Telstra's had its fingers in all those pies. Massive growth, massive growth. And its profit last year was the same as 10 years ago. Not a dollar more in profit over a decade. Now, what does that tell you? What happens over the next 10 years? Now, I expect you're right. I think the government will probably do the right thing by Telstra, but that's speculation, that's not investing.
That's right.
We don't know with any degree of certainty whether that's the case. And so I've got to make investment decisions about what is known. And what I know is that the company's trading at about $3.27 or roughly there. Its value this year is $3.12. Its value next year is $3.47, and the year after $3.54. So you're talking about a less than...
So they're on your... Put it in the Roger Montgomery black box.
Put the numbers
tumble around,
exactly, and see what spits out. And is it going to be a great investment? Now, that's the technique that I've used to avoid Telstra. And when a lot of my peers have been buying Telstra, believing that its value is a lot higher, the reality is that it's not. And when you look at the performance of the business over the last 10 years, well, I can't see that a company that large is going to change its spots very quickly. Very hard to turn a boat like that around.
Okay, let's hold you up for a second, because if I was sitting home watching you, and a lot of, you know, there's 1 million people out there holding Telstra shares. So their question is, do they hold, hoping that something happens? Now, imagine if the government does come up with an option that surprises you and it surprises me. Do you go back to the Roger Montgomery black box and put that in and change those values of the company going forward because of that significant innovation that might come from left field?
Well, I'm very lucky. I have access to every broker's forecast for every company in Australia. I get a live feed that comes into my home office. And looking at those numbers, so I take all those numbers in. You know, if anyone knows whether or not it's going to have a positive impact on the earnings of the company, it's going to be the blokes who are covering it. You know, they're looking at whether or not the CEO burps. You know, they're looking at in that much detail. I don't. I take a much broader perspective on these things. I put those numbers in, and I still don't get a massive valuation uplift over the next few years. Now, it could be that you're right. We could be surprised, and there might be a positive outcome, and they're allowed to charge what they like for the NBN, you know, and they can gouge everyone and be a real monopoly.
Foxtel as well.
And be a real monopoly. I don't think that's going to happen, but even if that did and it was good for the results, well, we'll put the numbers in at that time and we'll get the opportunity then. But right now, I don't own any shares in Telstra and I'm not going to be buying any. Anyone who owns shares in Telstra will have to make their own decision about, and that's got to be related to where they bought them, who told them to do it, and they should go back to those people who got them in the first place.
But Roger, what about this one? It is a very good dividend yielding stock, isn't it?
Yes.
About 8 or 9%. So if someone said to themselves, well, if you get a dividend yielding stock like this, and I call this my spec stock, where once upon a time it used to be a blue chip kind of stock, is that a totally dumb thing to do when you're getting 8 or 9% as a dividend?
No, provided the dividend is funded by cash, and in this result it has been for the first time. For the first time in many years, I should add. Since our American cowboy or Mexican cowboy friend was involved.
Yeah, be careful. There is racial discrimination act in this country.
Right. Well, I don't mean that, but that's where he's from, and I want to make the point that while he was in charge, dividends exceeded profits by something like $1.6 billion. So that's not the case now. So Thody, I think, is doing. Thody's doing a terrific job. It appears as though the dividend policy, it's still the bulk of the earnings being paid out as a dividend, and if the company's stable, it keeps generating the same return on equity, and it keeps paying out all of those earnings as a dividend. Well, the equity doesn't change, so therefore it's like a bond, isn't it? It's got stable equity, roughly stable earnings, and all of it's being paid out as a dividend. Well, you can value it the same way you value a bond. Now there's a little optionality in the possibility from what you're describing. If the government does the right thing by the company and its million shareholders, well, that could be good, and that's an option. But you've got to value it like it's a bond, and that's what I've done here. And that means it's trading at about its value. It's not at a big discount. Maybe if you like the dividend and you could get it at 20% lower than where it is today, well, that might be an investment case. But at the moment, it doesn't appear to be.